Hello everyone, Joshua Hayes at BigWaveTrading.com with the weekend video lesson. This is the agenda. We're going to talk about the SPY. Then we're going to go over the trade idea that I gave everyone last week that's working like a charm, TJX. Then we're going to review STRL, which is the first public trade idea that I've given that's actually, quote, quote, failed via the way that I'm trading it right now, but it's still good and looks fine based on how I would trade it if this was an actual bull market, uptrending market, i.e. we knew that we had a for sure bottom or we had QE in the Fed. Then I'm going to show you that we actually had a Grade-A CANSLIM setup. Unfortunately, that Grade-A signal came the day before earnings. Stock still did great. We'll review that one and a new trade idea for the week ahead. So let's get into it. The SPY. So first off, I showed you in the last video lesson how somebody brought up an inverse head and shoulder and a head and shoulder. I completely forgot to mention, which I knew, it slips my mind. I really have an agenda, but I forget things all the time because I can talk for hours about the market. You can't have a head and shoulder setup from a downtrend. So even though I said shoulder, head, shoulder, I just thought it was funny that there's two setups within this consolidation. And that's what I really want to show everybody. Until you're out of this crudely drawn box, but until you're really out of this range, you can be bullish, you can be bearish, but I'm choppish. So I'll remain choppish overall. Long term, there's multiple time frames in the market that I operate off of. I recommend everybody do the same thing. Longer term, using a monthly chart, I'm bullish. Why? This is when I get bearish. Look at us now on the monthly. We're above all the properly stacked EMAs. Long term, I'm bullish. Intermediate term, still bearish. We're below the key moving averages. Downtrending, weekly, got to be bearish. Daily time frame, it's mixed. It depends on where you start. From here, bearish. From here, bullish, mixed. Short term from this low, though, bullish, bullish, bullish. And this is what I want to show everybody. I'm a price and volume guy. Everything you see on this chart that is not price and volume, I'm going to remind everybody, is secondary, tertiary, quaternary. I know how to use it in regards to price and volume, but I'm going to remind everybody, if I only had this chart right here, I can operate with this chart right here. But I like to use this chart to help explain how everything looks. So when we broke out here, I believe in the last video lesson, I made mention we are triple green on the SPY coming out of a slingshot loose squeeze. Everything looks good. Now, the best moves come, obviously, when you come out of red dots, not the gray ones, but still, we are properly aligned on the daily time frame. We are now also above and closing above on multiple days the 200 SMA. We have never been able to do that this entire downtrend, and we're above this downtrend line connecting from the highs to the lows. So you got to give the credit to the bulls. You got to be short-term bullish. That being said, it's hard to see, but the volume as this market has rallied has declined. That also being said, the up versus down volume has been great. The breadth has been great. There's more new highs than new lows. The 10-day simple moving average is flipped. Everything looks good. The bad news is, here we go, earnings season, FOMC, Bank of England, ECB, all next week. Safety and caution is advised. But that's on the daily time frame. If we want to take a look at the big term picture, if you think that we have bottomed and that you've missed a bottom, because I now hear people having FOMO, I want to remind you guys, sold half of my long-term portfolio positions that I've done nothing but buying since 2008 in at the end of 2021. From 2008 to 2021, all I've done is buy in long-term portfolios. Told everybody I was selling half, sold half. Told everybody I was going to start buying back when SPY hit 400. Made a little 25% buy at SPY 400. Told everybody I was going to buy more at SPY 380. Bought more at SPY 380. Told everybody I was going to load the boat when we closed below SPY 350. Guess what? Best laid schemes of mice and men, a gang of gaff of glee. You hit 348 intraday. You never closed below 350. Didn't get my huge ad. Still might. Don't know. But I didn't then. Am I upset about it? Kind of, but not really. Also, going to remind everybody, I took a long-term portfolio position for the first time ever in Tesla against all common sense because I don't care what you guys think at all. He was a great innovative mind, and he still is, but he's also a nutcase. I don't like that as my CEO. I don't like my CEOs to become billionaires and then become nutcases. So I actually was willing to do a load on the Tesla long that I'd taken a long time ago in the long-term portfolio below 100. I had the limit set at 99.99, and as soon as that limit or as soon as that alert went off, I was going to buy Tesla. Look at what the low is, 101.81. Look at what it's done since. Once again, the best laid scheme of mice and men, a gang of gap of glee. So that's the market, guys. It's tough. But if you think for certain that you've missed the bottom, I'm here to say you have not. You have plenty of time. I always work with EMA stacks, and I'm going to remind everybody, the best time to get long the market is when you have the 200, 150, 150 properly stacked. Did you think that you were late when you bought it here? Well, if you did, you missed out on the 32% move. If we go back further, the same thing happened in 2019. The same thing happened in 2017 to these highs here. So you have plenty of time. We're not properly stacked. Also, the biggest thing for me, my best and biggest gains have always come when on the monthly time frame, this time segment volume is green. Look at the beauty of the 90s from 1995 to 1990, basically, actually 2000. When it's trailing around that zero line, you might as well consider this all green. Then look, 2003 to 2005, 2006 to 2007 top, 2009, basically we can go all the way through here to 2014. The 2017 market, which I will remind you on a monthly time frame, came out of a medium to tight to medium release squeeze. Big gains, big gains, big gains. That being said, monthly TSV, red. MACD, still red. CMF is good, which tells you you're still in a bull market on a secular time frame, but T-Team trend momentum is still negative. So even if we do have a bottom, you haven't missed it. Trust me, there's still plenty of time. Why do I not know if this is a bottom or not? I need to see at least one or the other of these three things. I need to see passive retail selling. I need to see at least 33% of the previous inflows come out of the market. Once I see that, once you get a move like you saw in October, you can start talking about a bottom. Also, if the October low would have came with a VIX over 40, I can start considering a real bottom. Also, if the Fed had pivoted from hiking to cutting, I could call it a bottom. Is it possible the market's going to bottom before the pivot? Absolutely. It happened in 1994 and in 1995, and then by the time they did cut rates, off we went to the races. But we haven't done so yet. Trust me. If you think now, after not wanting to buy the entire way down, which once again, long-term 20-year time period, always blows my mind that people don't add more on the way down in their SPY long-term investments and instead panic sell at the bottom. But if you think that you have missed the bottom, I'm here to tell you, you have not. All right, so last weekend I reviewed TJX. Told you, hammer candle off an uptrending 50 SMA. Heavier above average volume. BOP went from negative to positive. Good setup, get long above 79.55. If it triggers and fills me, I add it to the system. It triggered and filled me on 123. Immediate work. Now, after it filled me on 123, what did I do? It was an immediate red day, didn't follow through immediately. Low of day, 78.93. Where do you think I put my final stop to protect my capital in case it decided to do a nasty sell-off? You better believe, just like I told everybody, 78.92. The very next day, that didn't happen. It moved higher. Guess what I did after this session? I sold half. Yes, it's irrational, but I'm okay with trading like this in this market. I'm not certain that we've had a bottom. I sold half at the market, moved half of my stops to break even at 79.99. Look at what the low of day is. I'm still long. After this day, sold a third. Then a third of the remaining position, final stop at break even. Then sold a third. Now I have 1, 2, 3 trailing stops. After this day, ran the first stop. We're still looking good in TJX, but so far, so good. In a bull market, I am long TJX and I am long TJX. I will have not have taken any profits by now. I would have not changed my final stop from 78.50. If this was a bull market under QE, uptrend aligned, market with properly stacked moving averages, my final stop is still 78.50. In this tape, my final stop is break even. Sometimes it works, sometimes it doesn't. Enter STRL. I will remind everybody, it was a new long position on this day. If it does not trigger and fill the very next day, then the trade is canceled because we have an engulfing bearish candle on heavier above average volume and lost the green bop. The trade would have been canceled. Unfortunately for me, the trade did trigger and fill, and I got long at 34.06. Immediate final stop went to 32.22. They got me. Now, if they wouldn't have got me on that day, my final stop on this trade idea, I told everybody I was positioning size to here. If this was a normal bull market, I calculate the size to this low, but risk my final stop to this low. I give the stock all the way to this low to work. Did it hold that low? You tell me. Low of that day, 30.60. Low of this day, 30.34. Looks like it held. And look at STRL now since the long position. It is now higher, 2% higher. Would it have shaken me out of at least half of the position? Absolutely, without a doubt. Half, if I would have gotten long here in a bull market, 50% of the stops, no matter what, would have been there. The final would have been there. I would have at least been knocked out of half. And I will remind everybody, when you get shaken out of a trade, if it is a high-quality stock like STRL or a grade A setup per my requirements, once you get that bullish hammer candle, if it is abiding by that final stop, logical, rational level, you can buy it back. Had you done that, you would have added back to STRL here for a 7% gain. Now, am I bragging to you, telling you that I did that? No, or else you would see a white triangle. Once the day goes on, I cannot add a white triangle to any of these stocks. So whenever you see a white triangle Seco down here, you can be sure I got long and I'm long Seco with that 126% gain. Just like on TJX with that white triangle. You don't see a white triangle on STRL, do you? But once again, the difference between operating in a raging bull market versus this market. Am I upset that STRL is higher? I sure am not. It's just the way that she goes. All right, I got to be quick. I realize that I put a 15-minute hard cutoff time. All right, so MUR after this day, this is a great signal. You give me max green bop on this signal, this is a grade A setup. After this day, this is a signal. After this day, this is a signal. But not only is it a signal, after this day, it worked really well. You can see when I first went long here, but all of these would have been adds along the way. And then on this signal, after all of these pocket pivot point signals, the heavier above average volume, the growing green bop, I also want to show you what it looked like on Telechart version 18. Look at the long medium squeeze after it already went 2 dots yellow. Then green, green. I'm triple green in a medium squeeze. I have multiple pocket pivot point signals, increasing green bop, great volume. I told everybody this is a grade A setup. Unfortunately, earnings were the next day. Still set up the order anyway. Explained to everybody exactly how we were going to trade it. My buy stop and limit was 42.97. Next day, low a day, 43.08. What are you going to do? It's still working. But in a normal market, I am loaded to the T with MUR. In this tape, not so much. It's been the rare grade A setup. WFRD was also one. It's still working great. TTC was also a grade A setup. It failed. All right, guys, I'm sorry I'm running out of time. I didn't know it was only for 15 minutes. Anyway, ASC is your trade for the week. It's below the 50 SMA, so it's not great. That being said, 200, 150, 150. Proper EMA stacks. Pocket pivot point signal, slingshot, medium squeeze, trying to resolve out of it. Triple green. Candle over candle, heavier above average volume, pocket pivot point signal, green bop, the game plan, get long, 14.19, calculating my risk to this low. That is also going to be my final stop. And the same plan goes. In a normal market, this is going to be my final stop no matter what. In this market, if it's red and I get filled on Monday, the stop goes below Monday's low a day. If it's green, I take profits, final stop is at break even. That's the way it goes. All right, everybody. Love you all. Aloha.